So Wayne, we've seen a big sell-off in some big cap names today.
Yeah.
What are your thoughts on that?
It's been going on for a month now. All of the shares, mainly retailers that were just the darlings for a long time, years, have come under severe pressure this last month, and the resource shares have gone up. So I think this is a change in trend. I really do. I think that the massive outperformance of the retailers versus the massive underperformance of the resource shares has now turned.
I mean, just reading a commentary today on the CNBC.com website, they're talking about South Africa, and they say unlikely safe haven question mark. Wondering why that is so, why we've seen such strength in the local markets.
I mean, simplistically, why are we a safe haven? Our government's not bankrupt, we're not bankrupt, our banks aren't bankrupt. Our growth rate, 2.5–3%, is better than 0.5% or
and better
-2%.
than Brazil, if we're talking about emerging economies.
We have a stable democracy. Okay, we got unrest, but who hasn't, quite frankly? So on a relative basis, South Africa looks half good, and I actually agree with RMB's view that we could see some rand strength. I mean, I don't think it's going to strengthen massively. I think the rand's fairly valued at this price simply because no one's crying. No one's saying it's too strong or it's too weak, so therefore people must be happy with the rand at this price. But we should be okay. However, our share market's not cheap. Now I'm talking overall share market. Obviously there are two share markets within our own, the retailers and the industrials versus the resources, as we've spoken about. But our company earnings are probably at a peak now. And if you take some sort of normalized earnings or some sort of, through the cycle earnings, our PE gets close to 16, and that's just not cheap. So I don't think there's huge upside in our share market, but I think there's big upside on the resource shares at the expense of the industrial shares.
And what about on the bond market, if we're talking about assets as a whole at the expense of equities? Because we've seen, bond inflows, and we were talking about the World Government Bond Index. Some saying there's been a lot of forward buying and prior
there
buying.
will always be forward buying.
But that's going to be a significant event next week.
Yeah, it should be something. But these guys buy long. They knew this long time ago. So the guys buy long in advance. Now, simply put, would you buy a US bond below 2% or an SA bond at 6 or 7 or 8%? And the foreign is saying, well, we buy an SA bond, obviously, because it doesn't look as though the currency is massively at risk, and we get a very big carry on it, and we get money for free courtesy of the Federal Reserve Bank. So why not buy it?
Exactly. There seems to be more reasons to buy it than not buy it. Let's talk about the banking space. The financial index closing up 0.4%. ABSA up 2% today, and ABSA and Edcon in a partnership. Edcon getting the approval from the Competition Tribunal to sell that private label store card portfolio to ABSA. What does this mean for the two?
I mean, this is old news. I mean, this came out a long time ago. As you said, today's just the Competition Commissioner gave approval for it. It just means ABSA can expand its book. Edgar's can get a little bit more cash, reduce the strain in their balance sheet, because remember, they're heavily geared. They were in the private buyout, years ago now, 5 years ago. So they'll probably come back to the market, although they might come back too late, because as you were speaking about, the shine has come off the retail share, so they might come back too late. But ABSA's growing the books.
Do you think they'll relist again?
They'll only relist when it's favorable to them, because you can carry virtually any debt at current interest rates. Interest rates aren't killing you, so you can afford to wait before you can come and relist. But that's unfortunately, they should have listed 4 months ago, because they would have got a fortune, because every retail shares were, it was the best.
Not the right timing now, basically.
So I don't think it's the right timing now, but it does help ABSA. Now, banks had a massive run along with the retailers, and also this month they've come off quite significantly. Like first rand hit 27, then it fell back to the 26, 25, but they're picking up now. Banks' valuations aren't anywhere close to the valuations of the resource shares, and it's probably right that we see some green, some positive prices there.